Welcome back to Investing Talk Podcast.
Today we're looking at Rocket Lab.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave in the comments below.
So let's get into the analysis.
Okay, so let's start with the financials, because the latest numbers showed some really significant acceleration.
They absolutely did. Q3 2025 revenue hit a record.
It was $155 million, right?
That's the one. And what's really crucial here is that this was a 48% increase year over year.
48%. I mean, that's not just meeting expectations.
No, it dramatically beat them. It signals a real shift in scale for the company.
And this growth it's not slowing down either.
Not at all. Management's guidance for Q4 is even higher.
What are they projecting?
They're targeting somewhere between $170 and $180 million.
Wow. So if you annualize that run rate, you're looking at a company that's well north of $500 million a year.
Exactly. But, revenue growth is one thing. The really compelling part for me is the margin improvement.
Right, because costs can easily spiral.
Precisely. Their GAAP gross margin hit a record 37% in Q3.
And the guidance for Q4 is just as strong, isn't it?
Yeah, 37 to 39%. This isn't a one-off. It looks like a structural improvement.
So it's a sign that they're really getting that operating leverage as they scale up manufacturing and launches.
That's the key takeaway. They're spreading their fixed costs over a much, much larger revenue base.
And while they're not profitable yet, the losses are narrowing quickly.
Very quickly. The Q3 loss was only, 3 cents a share?
Yeah, which was way better than consensus estimates. It suggests that path to profitability is getting a lot shorter.
And they have incredible visibility into future revenue, which helps de-risk things.
Supported by that huge backlog.
A record backlog at approximately $1.1 billion.
Now, critically, how much of that is expected to turn into revenue in the near term?
That's the right question. Over half of it. More than half that backlog should convert to revenue within the next 12 months.
So that gives them a really solid foundation for the year ahead.
It really does. But let's pivot from the numbers to the why behind them.
The competitive advantage.
Exactly. Rocket Lab's major moat is its vertically integrated model.
Meaning it's not just a rocket company anymore.
Far from it. They're offering both launch services and these really high-margin space systems.
And that space systems division, the part that makes satellite components and spacecraft, that's the real engine here, isn't it?
It absolutely is. It contributed $114.2 million in Q3 alone.
So the majority of their revenue.
The majority. And it carries higher, more stable margins. This diversification is so important.
It insulates them from launch timing volatility, right?
Yeah.
If launch gets pushed back a quarter.
It doesn't sink their numbers. The component sales keep things moving.
At the same time, you can't ignore the Electron rocket. That's the workhorse.
It really is. They hit 19 launches in 2025.
Surpassing the 2024 total, and with a perfect success rate on those missions.
That high cadence, and more importantly, that reliability is a huge trust factor, especially for government clients.
And we're seeing that trust translate into some key international wins.
We are. They have upcoming dedicated missions for JAXA, that's Japan's space agency.
And the European Space Agency, ESA.
Right. Plus, they continue to do important work with the U.S. Civil Wars.
That's where you build the really deep relationships.
And that reputation is spilling over into their components business, too.
You're thinking of that Canadian Space Agency win?
I am. Nearly $1 million Canadian in R&D funding.
To develop a new reaction wheel, I think, for those mid-sized satellites.
Exactly. It's not a huge amount of money in the grand scheme of things, but it reinforces their credibility. It shows they're a go-to supplier for high-reliability hardware.
So we have this dual-engine business that's scaling fast. But the real long-term story, the thing everyone is watching,
is Neutron.
The reusable medium-lift rocket.
This is what's designed to capture that huge, lucrative, mega constellation market.
And we're starting to see real progress on the development milestones.
We are. The big one recently was the Hungry Hippo fairing.
Okay, you have to explain that one.
So the fairing is the nose cone that protects the payload. Normally, they get jettisoned, and you have to recover them from the ocean, which is complex and expensive.
Huge pain.
A huge pain. Neutron's design keeps the fairing permanently attached to the first stage. It just opens up like a hippo's mouth to release the satellite.
So no sea recovery, no refurbishment from saltwater damage.
None of it. It's a massive step toward rapid reusability. And that fairing has been successfully qualified and shipped to the launch site in Virginia.
Which makes that first launch target, Q1 2026, feel a lot more real.
It certainly does. Now, this has required a ton of capital.
How much have they spent so far?
About $360 million in cumulative R&D and CapEx through the end of 2025.
That's a big number.
It is. But here's the crucial bit of guidance from management. They believe they are approaching the peak investment phase.
Meaning the cash burn for Neutron should start to taper off.
That's the idea. And financially, they are in a fantastic position to absorb this last big push.
How much liquidity do they have on hand?
Over $1 billion, mostly in cash and equivalents.
So they have plenty of runway to get Neutron flying without needing to do an emergency capital raise.
Exactly. And even though their free cash flow is still negative because of all that R&D,
Which it should be at this stage.
right, their strong balance sheet gives them a multi-year buffer against any potential delays.
Okay, let's talk about how the market is viewing all this. Sentiment seems pretty bullish.
It's very strong. And that's partly because success from other big space companies is getting investors excited about the whole sector. We're also seeing analyst conviction really firming up.
I saw several firms raising their price objectives pretty significantly.
Yeah, some of the targets are now creeping into that $70 to $75 range.
That's a clear signal that the street thinks the growth and the Neutron potential are undervalued.
It is, and technically the stock is in a very constructive uptrend,
Trading above its 50-day and 200-day moving averages.
which usually signifies sustained institutional accumulation, not just short-term retail hype.
What's institutional ownership at now?
It's hovering around 71, 72%, which is very healthy.
Okay, but we have to talk about the risks. Nothing in this industry is a sure thing.
Absolutely not. The biggest short-term risk is and remains execution on Neutron.
Any kind of major schedule slip could really pressure the stock.
It could, because so much of the bullish outlook is baked into that program coming online on time.
There was also some headline risk around insider selling, wasn't there?
There was about $274 million over 3 months from the CEO and a director. That can look alarming.
It can definitely cause some volatility.
For sure. But you have to put it in context. This often represents portfolio diversification after a huge run in the stock. It's not necessarily a sign of no confidence.
Especially when it's happening at the same time that institutional ownership is climbing.
Exactly. The smart money is moving in while early insiders are diversifying. It's a headline risk, but maybe not a fundamental one.
Okay, so looking forward, say, the next 3 months, what are the big catalysts to watch?
First and foremost, the Q4 2025 earnings report. That'll come out in early 2026.
Hitting that $170 to $180 million revenue guidance will be critical.
And showing continued margin expansion. If they beat and raise their guidance for the full year, that would be a huge driver.
And second,
More operational milestones. We should be looking for updates on Neutron testing. Any news on engine static fires or stage integration will be watched very closely.
plus more of those international launches for JXA and ESA.
Right, just continuing to execute. Essentially, the story is one of a hyper-growth company just executing on its plan.
Scaling its core business while strategically investing for that next huge phase of growth.
It's a masterclass in juggling short-term execution with massive long-term ambition.
It really feels like Rocket Lab is cementing its role as the clear, scaled number 2 option in the whole space infrastructure economy.
I think so. They offer a diversified platform that very few competitors can match.
So for you, the investor, the question isn't really about the current business.
No, that's demonstrably strong. The real question is whether you can underwrite that near-term cash burn for Neutron.
In exchange for what could be massive multi-year compounding potential once it comes online.
That's the decision right there.
A final thought for you to consider. If Neutron succeeds, Rocket Lab won't just be a launch provider. They will be one of the few global companies that can provide every single part of a space mission, from the satellite components to the rocket that carries it and the high-level services needed to operate it. Think about the strategic advantage of controlling the entire stack.
It's a powerful thought to end on.
That's all the analysis we have for today. If you enjoyed this summary, please be sure to subscribe to the Investing Talk podcast for more deep analysis like this one.